2022 house price predictions. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at what Eliza Bavin has written on Yahoo Finance about 2022 predictions for the housing market. What do you reckon? Let's see. So, property prices skyrocketed in 2021 despite closed borders and at times severe lockdown restrictions brought on by COVID-19. Well, I would argue these severe lockdown restrictions actually were a benefit to property for two reasons. One, they forced you to save. Okay? They forced you to save. You couldn't go out for your smashed Av and eggs. And two, they made people realize, well, maybe we want to live somewhere else. Maybe we want a bit more breathing room. Maybe we'll be willing to sacrifice to move somewhere cheaper. So that all juiced up the market, everyone. And then don't forget the government pouring truckloads of money on the housing industry. You've got 2% home loans for single parents, 5% home loans. 5%, that's all you need for a deposit. So, ultra-low interest rates helped propel the market upwards to finish more than 22% higher. The latest CoreLogic figures revealed the average price for a home in Australia grew by $126,000 in 2021. But recently, there'd been chatter about that the boom will be coming to an end. So when can we expect that to happen? Here's what the experts have predicted for property prices next year. So the Commonwealth Bank, according to the CBA, house prices will continue to rise next year and will peak around 7% higher. The average price of a house in Australia is around $995,000, according to Domain. So a 7% increase would raise that to around $1 million and change. So we're all going to be millionaires in our crappy houses. The average price of a unit is now $609,000, so a 7% increase would put the average around $650,000. CBA's head of Australian economics, Garrett Arad, said the peak should happen around the middle of the year and then stay relatively flat for the remainder of the year. Now this is the thing, everyone. For people who are waiting for a significant correction, even if we had 10%, even if we had 20% cut, we'd only be at 2019 levels. Remember, we were talking about housing being unaffordable in 2019. Westpac has a similar outlook to the CBA. It expects property prices to continue climbing in 2022, but identified a swing factor that could throw a spanner in the works. Investors look set to be a key swing factor for housing from 2022 on, presenting upside potential near term if they return en masse, but also the potential for a more volatile cycle if this draws a more stringent approach from policymakers or response from policymakers, Westpac said in its monthly housing report. So while the major bank predicts property prices to increase at a much slower rate next year, a higher number of property investors entering the market could change that. Michael Yardney, the CEO of Metropole, believes the property market is not likely to fall. Not next year and certainly not the year after. Price growth, although certainly still positive, will be significantly lower over 2022 compared with a remarkable 2021, he said. Recent predictions of 10% home price falls over 2023 based on forecasts of sharp increases in official interest rates are clearly nonsensical. Yardney said that an uptick in migration would also put more pressure on the housing market, which would in turn keep prices higher. And the recent government announcement of a flood of 200,000 migrants set to enter Australia over the short term will sharply increase demand for current available jobs, he said. And of course, a quick return to high migration levels will again place upward pressure on home prices in our still undersupplied housing market. And I think he's right on the money here with regards to supply. There's a whole lot of supply issues here with housing in Australia. There's a whole lot of costs that government, bureaucrats, environmentalists put on housing, which all filters through it. It may sound good, that soundbite. Queensland has 6-star energy rating housing, all this other bullshit on there. Look, we're putting these environmental benefits into your house where the embodied energy will never be paid for in the lifetime of the house. And sure, it'll cost you more to buy the bloody house, but as a politician, I get brownie points, and brownie points are the real currency that keeps the country going. Bloody hell. I'm getting too old. ANZ Much like the other major banks, is predicting price growth will ease in 2022 and fall in 23. ANZ senior economist Felicity Emmett and Adelaide Timbrell said tighter credit, rising mortgage rates, and increases in the stock market would dampen growth in 2022. Affordability is expected to bite Aussies looking to buy a home after the extreme price rises we've seen this year, they said. However, ANZ's prediction is not quite as extreme as that of CBA or Westpac. ANZ believes prices will grow 6% next year and only fall 4% in 2023. So, NAB, the National Australia Bank, is also taking a more subdued view for next year. NAB revised its property price forecast to an increase of 5% in 2022 as a result of low rates and strong income support beginning to fade. We see a very strong price or print for house prices in 2021, but a sharp slowing in 2022 as the impact of lower interest rates fades and affordability constraints begin to bind, NAB said in its Q3 residential property survey. So there we have it, everyone. CBA, Westpac, more bullish. Yardney, definitely bullish. ANZ and NAB also pretty bullish on the market. A little bearish moving to the future. Let's have a talk about this. Now, as I've said many times, housing is an obsession for Australians, for all of us. And, well, housing affordability is a big issue. And I'd say it's an issue from an economic perspective. It's also an issue from a cultural perspective. It's dampening the ability for people to settle down and raise families. You've got people who are putting off having kids, having a family, because they are not in a house. They can't afford a house. And it's getting so expensive. And then there's going to be calls. There's the hope that hopefully, when one generation hands it down to the next, there may be a decrease in property prices, or the fact that we've had a recession, there may be a normalization of property prices, shall we say. But some of the things that people are missing is that these days now, whenever you see an article about someone trying to get a house by themselves, it's never one person, it's a household that gets a house. And these days, a household requires two people to work. The problem is housing, the high costs of it are inhibiting people's ability to start a family and settle down, and it's also de-incentivizing people from investing in other aspects of the economy. Why deal with all the wages? Why deal with all the government bureaucracy? Why deal with all the unions and employment law and bullshit? Just put it in housing. What do you reckon? Anyway, guys, why don't you check out this video from last year where the RBA was predicting a 40% house price correction, or modeling it. And then to see what's happened now. There you go. I suspect it was done for political reasons now, looking back. Tell me what you think, guys. And I'll see you all in the next episode of HeiseSays.